In this video, I'm going to explain and share with you an extremely profitable trading strategy that has made me over $1,000 in less than 2 days. I still have that trade open so you can see the action of this strategy, where to place your stop loss, where to take profits, and where to enter. It is very simple to understand, and you only need one indicator, which is volume. You can use this on the 1 hourly time frame, the 15-minute time frame, or even the 1 minute time frame, where just today there was 3 opportunities to get into this setup and make insane profits. Now let's not wait any longer and go straight into the video. Now before we dive into the tutorial, I want to let you know where I do my crypto trading. That is on Bybit or on 𝗬𝗫, where you do have insane bonuses down below. On Bybit, there's a 30,000 deposit bonus with a 20% fee reduction as I'm recording this video. Now on 𝗬𝗫, you will also find those incredible bonuses, and this is no KYC exchange. Just with an email and a password, you can sign up. Now, as usual, we are using Tradingview.com for our technical analysis. On the top left is where we're going to choose our pair, which in this case is going to be BTC $Tether.p, which is perpetual on the Bybit platform. Once we choose that, there is only one indicator that we need, like I shared with you at the beginning of this video. That is volume. Just by typing VOL as ticker symbol, you can see it is the first one right over here, and as you click on that, you will get the volume popping up. Now potentially the volume is going to come onto the chart. You just need to right click on the volume, and here where it says move to existing pane below, you will see. Now I have above, but you have to click on below so you have it separated from the price action. Now, like I shared with you, I am in a trade right over here on Bybit. This is exactly entering at $66,500. You might think to yourself, why did I enter at this peak in a short position and took most of the profits here as we were getting to the $61,800, banking over $1,000, as you can see, as realized P&L. This has just happened in the last few days. This is the 1 hourly time frame. Now, what you want to know about this strategy is that you can trade it any way. You can trade it to the upside, to the downside, in an uptrend, in a downtrend, or in sideways action. But what is most important is that you need high volume, okay? This is the 1 hourly time frame, meaning that every candlestick is 1 hour. You can see here the wicks, which is basically where the price action has gone inside of the hour, and the body candle open is right over here in this case for this candle, and the body candle close is right there, and this is only where the price has been during that hour, right? Just a quick explanation here of the candlesticks. Same scenario here to the upside in the green, right? This is the body candle open, and this is the body candle close, and the wicks is where the price action has moved through inside of the hour. Just a simple explanation here on candlesticks, but you can Google it and find about candlesticks yourself. Now I want to focus here most importantly on the volume. Volume is what we need for this strategy, and you want high spikes in volume, okay, when you have the body candle close with the wick, okay? We are going to use the wick, the bottom part of the wick, and the body candle close of this strategy. Now, this strategy, like I said, it doesn't matter what the price action is doing. If it's in a very strong uptrend, is it in a very strong downtrend, or is it in a sideways market? You need the first spike in volume, and there is no rule or regulation on how high the volume needs to be. This is high volume right over here. This is also very high volume right there, okay? So you just need higher volume than usual, right? There's not really an exact level of volume volume just need to see a large spike compared to the rest of the volume from the last few hours, in this case looking at the 1 hourly time frame. So we can clearly see that this right over here is a large spike in volume. And what we need to take into consideration from this large spike in volume is the price action. I can see this price action right over here. Now, what I do know is that the most important level from this candlestick is the body candle close and the wick. Okay, that is my interest zone that I want to take into consideration. So I'm going to get a box right over here. We got the high volume candle, and I'm just going to get a box from the candle close to the bottom of the wick, and I'm going to extend it. All right, as you can see, right, we have the wick and the body candle close. Now, what is important about this strategy is what I am waiting for next after this potential retracement, this bounce that is happening, that you want to see the candlesticks breaking down from the low of the close and the wick with huge amount of volume. Now, this is what has happened right over here. This was on the 13th of April, and this played out during the 14th and 15th of April in less than 2 days. I'm going to explain also where I entered, okay? I entered exactly at this level. So what you need to take into consideration is the large move breaking down the candle close and the wick, and you want to close a 1 hourly candlestick well below this level over here, well below the low of the wick. You cannot get here, this candlestick right over here. As you can see, this is not a successful breakout, hardly any volume, and you can see the next candlestick, massive volume and a big move down. Now is the moment that you have a really good entry point. Where is that entry point? In between the wick and the body candle close, as you can see. So the price action is retracing with very low volume, as you can see on the chart. And where you want the price to hit resistance is from the first volume candle, which is right over here, like I explained. This is the zone of interest, and you do not get into this trade until you break down and you retrace all the way up to that level, which is the candle close and the wick. You can see how the price action went all the way up here to this area, and now this is the zone where you want to pull the trigger. You do have a few hours in this case, so what you're looking for is to enter a short position. The closer you get to the candle close, the better. Now, this is where I entered. I was very patient, of course, and I entered exactly here at the $66,300 range. Your question right now, where do I put my stop loss? Very important. Your stop loss needs to go behind the candlestick open right over here. So the entire body of the candlestick, the back bit, is where you are going to put your stop loss. Now, why am I putting my stop loss here? Well, this insane amount of volume is selling pressure, and there would have to be a lot of buying pressure for the bulls to break through the back of this high volume candle, meaning that this is a wall of selling pressure, and you have high probability that this is going to roll down back to test the lows of the candle close. So your target zone is basically the candle close from the second highest volume spike. You can see the high volume candle right there. The close is where the price exactly hit. Now, you might see this, and this is not an extremely high risk to reward trading setup. It's only a 2-to-1 risk to reward, but this trading strategy has an 80% win rate, meaning that you do have high probability in this playing out when you have these high volume spikes and you're breaking the first high volume candle, just like you can see right over here. Now, this is where I exactly got into the trade. You can see here the 1 hourly candlesticks. Right over here is the high volume candle close. You got the breakdown. You retrace all the way up to that high volume candle, and where I took most of the profits, in this case over $1,000 in less than 2 days, because this trade happened on the 15th of April and was closed on the 16th of April. So around about 24 hours, you're taking most of the profits in this case of this 1 hourly time frame strategy. You can see right there how the price came all the way down to that 1 hourly candle close. This is where I took most of the profits. Let's go right away on the lower time frame, because you might ask me, hey, can this strategy be applied on the lower time frame, such as the 1 minute candle time frame? And I'm going to say absolutely yes. There are 3 examples just in this day, which is the 18th of April. In less than 24 hours, you had 3 opportunities and they all played out. I'm just going to share with you the high volume spikes. Like I said, you can trade this on sideways action market, uptrend or downtrend. It doesn't matter. The only thing that you need is a high volume spike and the resistance level, okay? Where you have, in this case, the candles closing right over here and you have high volume, as you can see on the chart. So let's just get this high volume candle right over here and let's put a box. We're going to extend that box and you just wait for the price action to break that high with high volume, with higher volume also. It doesn't need to be higher volume, just a high volume spike. You are getting into the retracement. So you can see the breakout right over here and you're retracing back down to the resistance, flipping it into support with high volume, and you're getting the bounce to the highs where you are taking those profits. Now, of course, this move is only around about $100 to $200. This is basically a scalp trade. Now, you can make very good cash here, only just scalping as well. Here, you apply the same risk. You get into the long position at this range. You also get your stop loss beneath the high volume candle, which is sitting here around about $61,730. And you're aiming for the highs of the breakout, okay? So in this case, it's a 1.5, to 1 risk to reward, but it's highly probable. Now let's go to the next one. Just a few hours after, we can see how the price action is getting a large move to the downside with high volume. This is our moment of interest. We are interested on the high volume candle here with the wick and the candle close. What do we need to do? We need to get a box and we need to wait for the price action after the bounce with low volume to break down. So we just remain patient till we get that breakdown with high volume. Look what happens. You get the breakdown with high volume, you move to the downside. Now you just sit on your hands and you wait for the price action to get above to that wick low body candle close here. Get into the trade and you're aiming for the lows, as you can see on the chart. Also a good profitable trade right there. You're just using high volume. Look at this. You enter the short trade here as you enter the wick and the body candle close, stop loss at the highs, and you're aiming for the lows. The risk to reward in this case is not massive, but you have an 80% win rate. So you can win several, out of 10 trades, you are going to win 8 of them. You're probably going to get stopped out on 2 of those 10 trades. Now let's fast forward, because this strategy has happened today 3 times. Having to fast forward right over here, the main reason why, look, we have a high volume candle right over here. The main reason why we do not get into this trade, you might think, okay, we are putting a box here at the lows of this high volume. What happens? There is no breakdown with high volume, so we do not trade this. Now you just wait for a high volume candle spike, and in this case we have one right over here where you have the price action moving to the upside with high volume. Now you get a box, you extend this box, and this is what you are waiting for. You are waiting for a breakout from this resistance where there's high volume with high volume. So you have the high volume breakout, as you can see right there. You retrace down to that level, which is the candle close and the wick. And here is where you enter the trade. Where is your stop loss? Your stop loss is beneath the high volume candle, which is right over here, as you can see. And you are targeting the highs, basically, the close and even the wick, right? This range over here to take those profits. As you can see, super simple to understand volume strategy. High volume, you get the breakout, you retrace down, and you get to enter the trade. Your stop loss is beneath the high volume candle, and you're targeting the highs. Very simple to understand and very profitable. Just in this day, we have seen this play out 3 times, as you can see. Not much more has to be said on this tutorial. Hopefully you have enjoyed. Make sure to practice this every single day and you will see the magic of this trading strategy. Check out my Bybit tutorial to learn how to trade on that platform, and I will see you in the next one.